Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Not too much to talk about this time. It's pretty much what I've talked about in the previous videos is happening today. So this is a chart of the SPY, which is the ETF that tracks the S&P 500. And I said, I think a few videos ago, if you check back if you wanted to, I said there is a possibility that we need to watch out that we may actually build this consolidation pattern. And it's simply because we've actually already broken above this trend line. And I said, there's multiple options that we could have done. We could either consolidate for a bullish move, which is what we're doing now, or we could come down to tag this upper trend line before we get a bounce up. Regardless, when you get a big down move like this or a big up move in this fashion, we normally get a 50% retracement. Okay, and this is pretty much what we did today. Today we have this 50% retracement, so you could pretty much determine that intraday bullishness would have happened, and it did. In addition to that, we did not close below this upper trend line here. We didn't even tag it. So that gives the market a lot of strength in some regard, okay? And in addition, this week is a very volatile week. It's the week of, Friday is the when all your June options expire, and there's a lot of institution game playing. And I've been saying that from since Monday. Well, today's only Tuesday, but I've said that since yesterday. So basically, just expect a lot of volatility, which is happening now throughout the rest of this week. Eventually, I do believe that even more so now, the 135.44 is more promising. I think back around here, a lot of people were kind of doubting this 135.44 level. But you know what? A level is a level. And again, this is just a mathematical calculation. I don't make up the numbers myself. I input numbers and it spits out this for me. And, the next one I have is a 139.98. So we have to be aware of that as well. Just keep in mind this is still a counter trend trade if you do take the trade to the long side. I'm not saying that it's going to get to the 135.44, but what I'm saying is I will not short this market until it gets to the 135.44. And if it doesn't get there and it happens to drop before then so be it. I wait for another pattern and re-enter again. Okay. I do have another calculation at about the 137 level. So if we do get past this 135.44 level, then the 137 should have some resistance here. That would be around this consolidation period there. If we get through there, then this is the 139.98. Do I think we get there? Nah, I don't really think so. But anything's possible. Today and for the rest of the week, it's going to be pretty volatile. Now keep in mind that if we can get to this 135.44 maybe Thursday or Friday, hopefully at the end of the day Thursday would be great, and then in which case I will short the market on Friday, because I doubt, because of the I think it was Greece's elections over the weekend. I don't know if anybody's going to want to hold over the weekend. So if we get a pop sometime tomorrow, actually if we get a drop tomorrow, then that would validate definitely even more so this is a consolidation period, and then maybe we get a pop on Thursday, a pretty big one hopefully, and then then I'll take a short on the 135.44, but not until it gets there. Okay, again, you don't want to chase the market. You want to try to catch the tops and the bottoms as close as possible, because your stops are going to be, if my stop is going to be at 135.44, then I definitely want to, I'm sorry, my stop is anything that closes above 135.44, then I want to enter in at 135.44, which means that my losses is going to be at very minimum in case I'm wrong. Okay, and then I stop out and I wait till it hits the 137 level, and if that happens, then I stop out and then I wait for the 139.98. It's really that simple. Okay. So pretty much nothing has really changed. One thing to take notice, it's kind of just consolidating right on this 20 moving average. So there is a possibility again that we can hit this 135.44. It seems more and more like it. The more we consolidate, the longer you consolidate, the more power you have to push through all these other levels like the 382 Fibonacci and the 50% Fibonacci to get to this 135.44 level. Okay. All right, this is a daily chart of the US dollar. Again, we had this upper trend line, upper resistance line there, which held up pretty well, and then it came back down and it retagged this support line here, and then now we get a bounce, right? And then yesterday I thought this was a fake candle, so what I did was I looked at the UUP, and sure enough it was a gap up. The UUP also had a gap up and then pulled back. The reason why the dollar pulled back today was obviously, as you saw, the markets were going bullish. So if the dollar up, markets down, and vice versa. It's not only the VIX anymore. Now that you can see in the after hour, this is the after hour candle here, the dollar is catching a little bit of a bid, and then the E-mini futures are obviously selling off just a tad bit. Okay, so you're just gonna want to keep an eye on the dollar here. If you take notice, we have this up move, and there is a possibility. Okay, it hasn't made enough candles yet, but there is a possibility that we may be consolidating bullishly, and if we do, then the markets should sell off because dollar up, markets down. Again, I still have this level here at 85.23. This level has not changed. Okay, there is not enough price change within these patterns here to validate a price change in this mathematical calculation. So this 85.23 is still valid. Okay, so that's just something that you want to keep in mind, that the dollar could potentially get all the way up there. All right. This is a chart of the VIX. We didn't exactly get a 50% retracement here, but if you got this candle here and you got the length of this candle, and then you activate the drawing, well, you bring the drawing down here, and then this is the top level of this candle here. You actually did in a lot of ways get a 50% retracement. Okay, so in some ways that 50% was valid, and we did get a 50%. Now I did say in the previous video we needed to close above this candle here to validate that we will be trading back within this rising channel here. We were unable to close above this yesterday's candle, and instead we dropped back down, and now we're out of this rising channel. Okay, so just keep in mind that if the VIX continues to pull back, then we should see a continued rise, continued bids being put in on the SPY, which is the S&P 500. Okay. So pretty much nothing has really changed from what I've mentioned in the previous videos. This is a chart of GOD, which is the ETF that tracks gold. Right now we got a tag of this gap window here, and I missed this trade. Unfortunately, it would have been an intraday trade, as you can see. We tagged this 50 moving average and this gap window, and then we slightly pulled back. Now there is a possibility still that we can hit this 160 level on the GOD. All the way up here. I think it was 160.96 or 160.87 is the fib level of is the, I believe, 75 fib level here. So if gold can reach here within the short term, it's a big move, but if gold can get there, then that's definitely something that I'll be considering taking a short on. Okay, I'm gonna keep this video short and sweet today because nothing much has changed. Let's just talk about a couple of stocks here. Most of the stocks that I talked about in yesterday's video is still valid as of today. So I won't be going over that. If you want to see what I talked about yesterday, then you can jump on yesterday's video. Alright, so first stock I want to talk about is Apple. I just wanted to kind of show you Apple. I mean, and this calculated level here, which is 576.67. I said that this level is no longer valid. And it's because your chances have been decreased. However, I just wanted to kind of show you how these mathematically calculated levels, how accurate it can be at times. Let's kind of look at the intraday chart here at the 10-minute of Apple, and you can see in today's trading, right? Yesterday we just pierced. Actually, day before yesterday, we went right into this level and we pulled back. Okay, and then the second time it went into the level, it broke through, it pulled back, and now it's support. So resistance held, support held. This is all intraday. This is a 10-minute chart. Okay, so and then Apple went up, came all the way down, and it pierced through this 576.67 level like it was butter, right? Came all the way down, came back up, and what did it do? It hit the 576.67 level once, twice, three times before creating this bearish consolidation pattern, and then came back down, created this hammer formation, and then continued higher, and it's almost right into this 576.67 level once again. Okay, so these mathematical calculations are pretty good, have been pretty good so far. So hopefully, they play out for the future trading. Last stock I want to talk about is WMT, which is Walmart. Had a level here which is a 67.21, which is a 50% retracement of the big up move candle. Whenever you have a big move, again, you normally get a 50% retracement. And the reason why I held on to this trade was simply because the 67.70 level, although it looked like it didn't hold here, which I actually got a intraday trade off of, but after it pierced down through, similar to Apple, it came back up. It kind of pierced through, and then it started holding. So today it held 67.70 once, twice, and then it came back down. And now for the fourth time, it's still holding the 67.70 level. It's actually right now closed at 67.72. It didn't quite make it to the 67.21. Let me switch to the daily chart. Okay, so again, just as far as history, I actually bought I shorted Walmart here, right where all the three trend lines came together. Okay, and we had a nice pullback yesterday, and then I said at 67.21 I'll probably dump the stock. Unfortunately, the low of this candle, let me kind of just zoom in here. The low of this candle, which is actually a doji candle, was 67.30, so it's about 9 cents off this 50% level here. So right now, all I have is a break-even stop. So the worst case scenario is I get stopped out of my trade, like I never took it in the first place. So if tomorrow we get a pop in WMT, which is definitely possible, um, you know, then I get stopped out, break even, no sweat off my back. Now, here's the thing, right? Because today Walmart was only up 19 cents. However, the SPY was up a whole $1.50. That's kind of telling me that one of two things, which is contradictory, unfortunately, if that's even a word. First thing is this stock is in relative weakness for today, or it could be a lagger and it might pop tomorrow because we created this doji candle after a down day. Now, I don't really like this. I would rather have it come down maybe 2 or 3 candles first before a doji pops out. So this doji, to me, in my opinion, doesn't really validate an update. And plus, if you look at volume, the volume is really low. So there is a potential that WMT could actually go a lot lower. So we'll see what happens in the intraday. And in addition to the reason why I didn't sell it today, even though I got closer to 67.21, was again, we have to always look at the intraday. So I looked at the hourly chart. Again, I don't really like the hourly chart because there's only 7.5 hours each day of trading, right? So I took the trade all the way up here. It's come down, okay. And what does this kind of look like? It's kind of looking like a bearish engulfing pattern. I'm sorry, a bearish consolidation pattern here, and hopefully we drop at least to this 50 moving average here. In which case, I'll probably either dump my shares, or it really depends on what day of the week it is. If I think next week we're gonna have a bearish week, then I'll probably hold on to Walmart for increased downside. But again, I already have a break-even stop, so it really doesn't matter. I'm playing with the house's money right now. So at this point in time, it's really a matter of if I want to profit off the stock or just break even and get out. Okay, so that's pretty much it for today. I mean, pretty much everything's status quo. It's going to be a very volatile week, like I've been mentioning. It's good for intraday trading, but not so good for swing trading. As you can see, you don't want to chase. I mean, chasing, as you can see in this SPY, would just would just be a very bad thing to do. I mean, we've had an update. I mean, a down day, update, a down day, update. I mean, it's just it's just been a crazy volatile week, and it's only Tuesday. Okay, so so that, yeah, this is Monday and this is Tuesday, so we still have the rest of the week to go. So just hang in there, be patient. I'm trying to hang in there and be patient. I'm waiting for this 135.44. Whether or not it gets there is the real question, but that remains to be seen. Again, I'm gonna stay in cash, except for Walmart and maybe intraday trading. But as far as my swing trades, I'm gonna stay in cash until this 135.44. Aside from Walmart, this 135.44 is my next target to short. Okay. Everything else is remains the same as what I've been mentioning in the previous video. So God bless you all. Thank you very much for watching these videos. Good luck to your trading tomorrow, and hopefully I will see you in the next video.